So now let's talk about accumulation and distribution. Accumulation and distribution of market positions. Now, operators, market makers, they have at any given time, they have very large orders from institutional clients to enter the market at a particular price. And now, in order to keep these clients happy and keep them paying the market maker to execute these large orders, which provides a nice income for them handling these institutional clients, they're going to do everything that they can to get the best price for their client. And to boot, they're going to also be trading for their own account, and they're going to be trading in the same direction as their large retail clients, because they see both sides of the market, so they know in advance which way the orders are going to push the market. And so put yourself in the position of a market maker. Now you have a large order to say purchase 500,000 contracts of the euro dollar. That's right, I said 500,000 contracts. Now, if you're trying to get a price of 5,500, saying that will be around this area here on the chart, if you execute those contracts all at one time, price is going to zoom up, okay? And there's no way that you as a market maker would be able to execute all of those contracts at that 5,500 price. So what you have to do is you have to scale into the position by cost averaging, meaning that you want price to go down below 5,500 so that you can buy some contracts there, and that will offset the contracts that you had to purchase at 5,500 or a little above 5,500. And this brings us to the concept of accumulation. Now, when a market contract or share is under accumulation, that means that the insiders, the operators, the market makers, and institutional clientele, they're starting to accumulate positions. So they're starting to buy. And even before the change in supply and demand is reflected on the chart, you can start to see where they are accumulating their positions. Now, they're not always in control of the market, but there are certain opportunities that present themselves where the operators have the ability to use their leverage to manipulate the market to do what they want it to do at a given time. Now, how does this help you in your trading? Well, if you know that a market is under accumulation, then and you want to enter short, you know that even though price is falling at this particular moment, that the insiders are buying, they are accumulating positions to go long. So even though you will see red or down bars, that does not mean the market is weak. You can have a down bar or a series of down bars and the market can still be weak, and you only want to trade short when the market is weak, and you only want to trade long when the market is strong. So let me repeat that in case I wasn't clear. The market can be falling, or you can see red bars and the market is going down, but yet the market is still strong because it's under accumulation. And when a market is under accumulation, you don't want to go short just because you see the market falling, because you know it's only a matter of time before it turns and reverses on you. So when a market is under accumulation, you know that you're looking for an opportunity to go long. You're looking for an opportunity to buy the market, even if you see that price is falling. For example, we see price falling here. Now, even though price is falling down here and falling down here, from here down to here, this market is under accumulation, and each arrow I have checked is the strong bars that closed strong. And as you can see that each one of these accumulation bars that I have marked here, they were down bars, yet they were exhibiting strength. And this is why the market actually shot up from this area. And the reason why I drew the arrows was because this is where the operators or professional traders were entering the market. When we look at our MI indicator, we see that it's blue. And now think about this. These are weak bars. You don't know they're weak bars yet because we haven't gotten into how we determine if a bar is strong or weak, but it has to do with the MFI in combination with the price volume spread. But right now, just know that these bars are strong here. So that lets us know that insiders are accumulating positions. So when we first see this bar, the strong bar here, after price has been falling, we're thinking we're looking for an opportunity to go long. And when we see the second one, strong bar, we're definitely looking for an opportunity to go long. We're not looking for an opportunity to go short. And the same with the third bar. Now we're really looking to go long because this zone, these bars here, that indicates the area where the insiders were accumulating positions. So they were from here down to here. They were actually accumulating or buying positions. And we see here, here's a bar here. Even though this bar closed down and it's a rather long bar, this bar closed on strength. Near the bottom of this bar is where the insiders started accumulating their position, and this next bar confirmed that they were accumulating their positions. And then this next bar showed strength and showed that the insiders were in big time. And we can see that price once again went in the direction of operator strength. And we can see the same thing at play here, except for this long bar here, it closed on weakness. Okay, but now this next bar closed on strength. So we have weakness, much weakness, then all of a sudden, bam, we have strength. And then on the very next bar, we have operator participation on the next bar, and the next bar finished strong. The next bar finished with strength upon operator participation or insiders entering the market, and price continued up. And so now we know what accumulation is. Okay, it's when a price is falling and yet insiders are accumulating positions, or price may be rising and we will still be able to tell if they're accumulating positions. And so next we'll talk about the opposite of accumulation, which is distribution. And distribution works exactly the same way as accumulation. It just works in reverse.